Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Connon, along with Dennis Dick, and we have Sean Udall on the line. He's the tech stock strategist, joining us here just before the big print in Apple. Sean, how you doing this morning?
I'm good. How are you guys doing?
We're doing good. I want just a little bit, before we go into the specifics here and what you're looking for out of Apple, we were chatting before I went on vacation, and the market was getting the beats and Apple was getting the beats here, and you mentioned to me that, it took out the 200-day moving average, took out the 50, took out the 200-day, and man, you just felt that I think you might have called them algo seekers, and everyone was getting so bearish the stock 2 weeks ahead of earnings. You turned around. You were a little bullish on it. Boy, I wish I would have followed your lead on that one. Could you just explain that little dynamic there that you were looking at and how it helped you, get into a pretty good trade so far?
Yeah, well, I mean, I didn't know for sure that they would attack Apple before earnings, but I mean, it is pretty typical that there's a seasonality trade. That being that. There's always, it just seems like every time before Apple earnings print, and here's the weird thing, it usually seems before the very best prints in the stock, you just get some weird activity. And you get the weird activities usually starts in the form of what I'm just going to call it. They feel like planted stories, even though I doubt they are. It's people get the fear going. So what was the latest this time? A couple times before, it was Bengate. Remember the stupid bendable iPhones, right?
Oh,
that
yeah.
Actually people don't remember, but that hurt the stock. Before that, there was something else. There was Antenna Gate, right? And that was before Antenna Gate was before just an absolute ripper of that's the huge 4S cycle. So anyway, this time it was, I guess you want to call it Watchgate, or people are returning watches. HuffPost seemed like every day they would write an article about how bad the Apple Watch is or something like that. And by the way, I doubt more than about 10 or 15 phones watches have been returned. And if you get to the actual numbers, so the bottom line is always something. And then what happens though is you get this chart fear, right? Apple breaks a couple moving averages. People start getting all wound up about it. And basically, they just, the weekend, I think Dennis even talks about this, you get the stop seekers, right? Programs get kicked in. Let's see how much pressure we can create in a particular stock. But I mean, you just look at the chart, the day it hit 120 or below. I mean, that was just the most stupid move I've ever seen. However, there was pressure. There were some news items. There were some Watchgate items. You had a little bit of macro. And lo and behold, the stock goes down $5 in 2 days. And I was pretty public on attacking it. I didn't catch the low, and I already had a decent chunk of Apple anyway. But I think I got in there, high 120s, low 121s, something like that. I think it went about $2 below my trade. But that we see it happen all the time. I mean. The low on Google was about 4 or 5 days, by the way, before they printed. So, you typically see, you don't always see this, but there's a lot of times that you see a really good raid trade. And by the way, I'm getting contact with a few props. I started hearing that, oh hey, we're shorting this. We being various props. And when I hear the props are shorting a big name like Apple after it's already gone from 134 to 122, because they want to catch 2 points, I'm usually going to be on the other side of that trade.
So what now, Sean? What now? I mean, we've had the big run up, tacked on $10, trading up another $2 here in pre-market trading. I believe we have the earnings tomorrow after the close here. Now you got to remember on the last print, it made its all-time high. And then backed off, and basically he's done nothing for the last 3 months here. First of all, what are you looking for in the actual numbers? I know you do. You got your own little calculator out. You do your own figures. A lot of times you differ from the street. What are you looking for in an actual number? And now that it's had this earnings run up here, are you tempted to take some chips off the table, or are you just going to let it fly into the print?
I'm probably going to let most of it go. I may, you know what I may actually do. I may do kind of what I call, so I have common. So I wouldn't mind doing almost a straddle around my common. So I think this is what kind of a lost art too. I think people forget if you already have a common position that you're powering up pretty good, it gives you a lot of flexibility. But I could hedge part of my common position with some puts, even though I don't really think I should. I might just out of prudence, I might. But then on the other side of that, maybe I'll do some bullish. What I would call some kind of out there calls. So, not calls right at the money, because I don't need calls right at the money because I have common. So if it goes up another 5 or 6 or 7 points, I'm going to get paid. But maybe some 135s or something like that, right? I should have put more stuff on a little while ago. But I caught some for that in that low trade, and I caught a really good trade out of that. So I'm not too worried about maximizing it from here. I do think, if we could see 135 or 136 or 137 before the print, to be honest, I don't really like it up to here because I'd rather see the stock. I think it's getting a lift off of Netflix and Google right now, right?
Yeah.
So
yeah.
I would actually rather see the stock between 125 and 128 ahead of the print. And then if they have the typical pretty good, strong Apple number, I think the stock might react better. I think if they run it up too much, it might get a little bit hard to beat, right? However, the stock, if you bought Apple 6, 8, or 9 months ago, and you actually were kind of a little aggressive, or you're a late Momo trader, and you paid too much for it, you're really not up very much right now. If you paid 126 and that was 8 months ago, and the stock's at 131, you're not very excited right now. So we talked about corrections over time and then over price. Apple and Google and Netflix and a bunch of other stocks, Netflix not as much, but a bunch of stocks right now have effectively had a correction over time, not price. And Apple's one of those. The stock really hasn't done much since especially off the highs of Thanksgiving last year, off the highs of January, February. We're talking about another stock that really hasn't done much for 6 months. So I wouldn't be surprised if Apple breaks through and breaks above 140, maybe even sees something in the low 150s. It wouldn't surprise me at all. I wouldn't be surprised if the watch numbers is good. Now, they're not going to release a watch number, but we should be able to back into the watch number relatively easy. iPhones won't be a surprise because plenty of people are out there. But here's the thing. So you asked me about my number. If you kind of just take the watch numbers and some of these things that people are throwing around, yet the analyst consensus is still, as of about last Wednesday, it was still like at 177, 178. I can pretty easily get to a $2 earnings print. So, wouldn't be a big surprise to me if Apple does beat by 15 to 20 cents, even if the stock's running hard, if they beat by 15 to 20 cents and have a decent inline guide or better, I think you're going to have a hard time keeping the stock below 135, put it that way.
Yeah, and I look at Google too. They ran up 50 points ahead of the earnings report and then tacked on another 100 afterwards. So if they're hungry and if they're looking, if I was short Apple right now, just saying, hypothetically speaking, after that Google report and seeing how much it popped off it, I'd be scared to be short Apple going into the report.
That's a good point. And maybe that's kind of why we're seeing the stock up to here. But Dennis, let's talk about Google.
Yeah.
Okay, Google had missed 7 of the last 9 quarters. Okay. What did Google really do that was that great? Revenue was up about 11 to 13% after FX. If constant currencies, it was up 17 to 18%. And the stock basically has had a 20% move. Google used to be my largest position. In 2012, I was pounding the table to sell Apple and buy Google. I owned some Google all the way back, I think 04, 05, like fairly soon after the IPO. So it's a stock I'm intimately aware with. That was not a great Google quarter. It was just a quarter where they finally didn't miss earnings 7 of the last nine times. So now, is it a relatively cheap stock? It is. Did they beat by 30 cents? They did. But did they grow by 20%? No. So, I don't know. If put it this way, if you can get 20% move out of a Google that still to me is relatively unexciting, and yet to kind of operate like the Google of old. It might just be too big now to operate like the Google of old. Personally, I think they need to spin out YouTube. So I think they need to kind of do some financial engineering trades. I think they need to do some smart M&A, and do some other things. But they did have $7 billion in cash flow too, which is about $2.5 billion better than they've been doing in the last 2 or 3 quarters. So, but if you're going to get that excited over Google, okay, if Apple beats by 15 or 20 cents, you got the watch coming. I think you have an Apple Pay TV service coming that's going to be really disruptive to the marketplace, maybe to Netflix. And then, what if Apple gets into search? So we'll see. I mean, I just think you're going to have a hard time keeping the stock under 135 if they do beat by 15 or 20 cents and don't have a really bad guide. By the way, I think Watch is going to do 15 million units. I've been on that train the whole time. Now, that number seemed terrible because guys were coming out with 30 and 35 and 40 million watch estimates for first full year. If I'm wrong at all on the watch, it's because I'll be too low and I'll have to move the number up. So now that everybody's gotten fearful on the watch, if you start seeing, I mean, even at 15 million units, by the way, that's $9 billion in revenue. I mean, I don't know too many companies that are organically creating $9 billion revenue streams. So if that's a flop, I'd like to have that flop all day long.
Great point, Sean. Just switching it up here, we're also on Tuesday night going to get GoPro's earnings. I know this is another one that you follow as well. It's trading up another $1.50 in the pre-market here, up at the 58.20 here. Stock has been on a little bit of a tear. We got a little overhead resistance at 60, but what are you expecting from GoPro?
Yeah, this actually might be one sort of in my top 5 of potential earnings beats for the quarter. You never know. But, this has been a heavily maligned stock. They have just, absolutely crushed it the last 2 quarters. So here's the thing. I think there's 2 trades on GoPro. I think you have a near-term earnings setup trade. I think there's a good chance they really have a great report again. And by the way, this is a pretty young company, not too far away from the IPO, only about a year and a half. They're already producing a lot of EPS, a lot of cash flow. They have a really good balance. I think, you don't talk about balance sheet strength out of a young company that's a relatively new IPO. GoPro has some pretty decent balance sheet strength. So, at this price too, GoPro lines up to be relatively surprisingly, a lot of people might be shocked, but I wouldn't be surprised if GoPro were to get taken out in a fairly aggressive M&A maneuver. In fact, I actually think Apple should buy GoPro. I doubt they will, but it would be, hey, it's only trading at a $7.6 billion market cap. But you say only, well, you got Facebook at 230 and you got Apple at 750 billion. You got, again, what did Google just put on? Okay, that move that they just, well, I think in one day they added 45 or 50 billion in market cap. So they could pay for GoPro 3 times over with 1 day of their stock move. So anyway, the bottom line is, I kind of wouldn't be surprised if GoPro got bought out. The premium from here would be it'd be an $80, $100 stock. But I think there's 2 trades on GoPro. There's the trade right now, which maybe it breaks 60, and then what does it do? I don't see much resistance above 60. You probably have 10 points. If earnings are good and the technical trade works, I think this could be a kind of a barn burner, right? A fast 10 points, fast 15 points. And then, it's gonna have a hard time probably getting above 70, 72, 75, something like that. Here's the other trade, though. If this thing runs along and you get really close to the end of the year, so you got the Christmas season for them, which is always good, but guess what they're going to do next year? They're going to start making drones. And no matter what you think about drones and no matter what you think about, that kind of market, if it's overhyped or what, I'm going to tell you that the GoPro drones are going to be the most trusted, probably the longest lasting, probably the toughest, i.e. they're going to be the best drones. And they're probably going to be drones that, come with a better warranty. And I just think, you're going to want to be in the stock ahead of the time that they start selling drones.
Hey, Sean, real quick here.
Ahead.
We only got another minute left, and just real quickly, tech stock we just don't talk much about here. What are you looking for out of IBM?
I think IBM could be surprisingly good. The Watson sort of sales channels ramping up. That's their That's their kind of business intelligence segment. They do have a lot of good pieces of that business. They have some great database architecture strategies. Here's another one. It's not like they've been terrible. IBM has had a really hard time finding growth. So they haven't really been beating estimates. They haven't been getting hit that hard. But here, this stock we're talking about stocks that have gone nowhere for 6 to 8 months. This stock's gone nowhere for 2 or 3 years. So they do need growth. They need to probably buy a couple things. They need to add some strategic M&A to the tool belt. But I don't know. I would have a hard time. A lot of people, like Dennis said, I'd have a hard time being short Apple into the print. I'd have a hard time, I think, being short IBM into the print. It just doesn't set up. I don't know how much juice you have to the downside if they do disappoint. And if they actually say something good, this thing could kind of see 180, 185, maybe even 190 pretty easily.
We've been on the line with Sean Udall. He's the tech stock strategist. Sean, I didn't even get to half of the stocks I wanted to cover with you, but we're out of time here. We're going to get you. I'm going to make sure we get you back on again here during the earnings season. Great input. We appreciate it. We'll talk to you again soon.
Take care, guys.
Thanks, Sean.